Welcome to the Real Estate Espresso Podcast, your morning shot at what's new in the world of real estate investing. I'm your host, Victor Menasce. The housing market has taken a huge hit this year as mortgage interest rates have surged and homeowners scale back on purchases. The latest casualties in the property technology world are companies Redfin and Compass, both of which announced layoffs today that combined amount to about 1,000 people. In a letter to employees and published on the company website, CEO of Redfin, Glenn Kelman, wrote, and I'm going to quote from a portion of the letter, he writes, Redfin, I'm sorry to say we're asking about 8% of our employees to leave Redfin today, or about 6% if you include the people of RentPath and Bay Equity. Over the next few hours, managers will be calling the people leaving. And when we're done with the calls, I'll send out a note. I will host a brief all-hands at 11 a.m. Pacific to answer any questions which you can submit via the form. Redfin will also announce the layoff to the public, posting this message to the website. Demand is off by 17%. To all the departing people who have put your faith in Redfin, I'm sorry we can't keep our commitment to you. With May demand 17% below expectations, we don't have enough work for our agents and support staff, and fewer sales leaves us with less money for headquarters projects. We're offering laid-off colleagues 10 weeks of base salary with an additional week of pay for every 12 months of service beyond 1 year, capped at 15 weeks of pay. For agent and support roles, severance pay includes the estimated value of the productivity bonuses or sales bonuses. We also pay departing employees the cost of extending health care for up to 3 months. This should give you until the end of the summer to find work. I said we wouldn't lay people off unless we had to, and we have to. A layoff is always an awful shock, especially when I said we'd go through heck to avoid one, and that we've raised hundreds of millions of dollars so we don't have to shed people after just a few months of uncertainty. But mortgage rates have increased faster than at any point in history. We could be facing years, not months, of fewer home sales, and Redfin still plans to thrive. If falling from $97 a share to $8 doesn't put a company through heck, I don't know what does. It's time to make money. We're losing many good people today. In order for the rest to want to stay, we have to increase Redfin's value. And increase value, we have to make money. We owe it to everyone who's invested their time or treasure in this company to become profitable and then very profitable. Those were some of the comments from Redfin's CEO. Meanwhile, a Compass spokesman confirmed that the company is cutting about 10% of its staff, or about 450 people. They said due to the clear signals of slowing economic growth, they've taken the measures to safeguard the business and reduce costs, including the difficult decision to reduce the size of their workforce by about 10%. Both Redfin and Compass are in the business of helping people find and purchase homes. Mortgage interest rates surged to nearly 6% this week, significantly higher than the rates below 3% seen only 6 months ago. Needless to say, the idea of purchasing a home is far less attractive than it's been in recent years, and combine that with overheated markets where prices rose dramatically, many potential buyers are putting their purchasing plans on pause. Some of the layoffs are in response to the rate increases and the slowdown that's been experienced so far, but we've also received inside information that was also leaked to the press yesterday in advance of the Federal Reserve announcement. The leak is that the Fed is going to increase its interest rate by 75 basis points in the Wednesday announcement. We expect that many in the executive suite, in the world of real estate and in banking, would have received that kind of behind-the-scenes information about the acceleration of interest rates going up faster than predicted. Earlier in the quarter, Wells Fargo announced a reduction of their home loan origination workforce. Better Mortgage cut roughly 900 jobs, or 9% of its workforce. USAA is cutting 90 mortgage jobs. PennyMac is cutting 277 jobs in California. Flagstar Bank is cutting 20% of its mortgage staff, or about 420 jobs. We expect to see more announcements in the coming weeks, in particular after the interest rate announcements. There is a market slowdown in sales of single-family homes across the nation. And what is even more telling is that the latest attempts by the Federal Reserve to reduce its balance sheet have been met with resistance in the market. The Fed attempted to sell some of its mortgage-backed securities currently being held on its balance sheet in the open market, and the result of that sale was no bids from the private sector bond lenders. And since the Fed purchases were a major source of funds into the residential mortgage market, we can expect to see a significant drop in loan liquidity, which is going to make it much harder to get a loan irrespective of interest rate. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.